Hello and welcome back to AI Ramblings, episode 42. Also solo this week again. We have a lot to discuss, so many things going on. Again, as usual, I've picked a handful to just kind of talk about, and I would always welcome your thoughts, comments back in the various socials. First up, Super Bowl is done, but actually, as entertaining as the game was the Super Bowl ad contest between Anthropic and OpenAI in particular, where Anthropic, I think, took the round, where they had four very clever, well done, on point counter branding ads with against OpenAI, basically poking fun at OpenAI launching their long expected ads product that would compete against Google and Anthropic basically saying, hey, we are much cooler than them and we can do our business through business enterprise APIs and so on. We don't need ads. We don't need no stinking ads. So it was a fun little bout to kind of watch and go through. But I think it underlines a very key delineation between these two companies that are leading the charge along with Google Gemini in the US for large language models becoming a foundation for everything that gets built in terms of AI applications and services by millions of businesses, large, medium, small, governments, and so on. Anthropic is on quite a tear. I have a post coming up tomorrow, which will also be up in the show notes today, that talks about this essentially Coke versus Pepsi battle, where, of course, OpenAI has been the Coke to Anthropic's Pepsi. But the two companies are both shooting for big IPOs this year. They're both neck and neck, different business models, different approaches. And there is a not small chance that Anthropic could actually surpass OpenAI. And there's a lot of moving parts here. I talk about it a lot in my posts for Sunday this weekend, and you can take a look at it. But I wanted to highlight this as one of the core developments going on this week in particular, post the Super Bowl. The second bit of news I wanted to highlight. Again, we've all known that, especially after the quarters of all the Mag 7s, that each of the companies is essentially doubling their CapEx. Meta, Google, Amazon, etc. Those three in particular, along with Microsoft, are now between $600 to $700 billion of spending in AI CapEx this year. That's relatively old news. I talked about it last week. The bigger news, and I've also written a lot about this, and I just did an update post on this, is that these companies, as expected, are now stretching the limits of their free cash flow generation. What does that mean? That means they have to finance these big capex, and we're talking about a capex that equals the budgets of countries like Japan per year, or countries like Germany. $700 billion is almost 2x what the US spent in today's dollars to send Neil Armstrong and others to the moon, probably actually to send all the 12 astronauts that we've sent all the way into the early 70s. So these are big, big numbers. And the companies, the big Mag 7s especially, are stretching even their extraordinary financials, their balance sheets, adding on debt in creative ways. And there's a lot of detail here in the post that I've written up. And one iconic example of this was Google raising about $20 billion, about $1.5 billion in one specific type of bond offering, which to finance geeks like me is of note. But it's interesting in general because it's one of the first very rare 100-year bond offering at a little over 6% interest rate, 100-year bond offering from Google that investors were so excited about that it was oversubscribed multiple times. In other words, they could have raised a lot more, and they probably will, as will others. 100 years, just to put in perspective, that's basically longer than the lease that Britain had over Hong Kong to make Hong Kong before China said, Hong Kong is ours, and the rest is history, as they say. So the capex at these companies are now stretching their financials, and that is an interesting thing to note all through this year and definitely into next year, because these trends are going to be continuing. Concurrent with this is just the ongoing issues of AI fears, and this has been an ebbing and flowing with AI. So for about a decade or more, since the beginning of generative AI, etc. But what's different this time is that, again, AI researchers from companies like OpenAI, Anthropic, etc., are raising the alarm and in some cases leaving, both on safety grounds on AI and also on the concerns of greater than expected job losses with this technology, both white collar and eventually potentially blue collar. And we've seen this before, but it's just that it had been in abeyance for the last, I would say, 12 to 15 months. And now it's resurfacing. And that is an interesting thing to note. There's a lot of detail here that, again, I would encourage you to take a look at, which brings us the main topic I wanted to just touch on and just highlight a couple of more things is this business of Anthropic stepping up to OpenAI, where Anthropic has a shot at being the Coke, not the Pepsi, over the next couple of years. And a couple of reasons for that. Number one, they have as equity partners almost everyone that counts in the Mag Sevens. In other words, and not only Amazon and Google are equity partners in Anthropic, now also Microsoft and NVIDIA have invested over $15 billion in Anthropic. Beyond the equity investment, what's more important is that Anthropic's Claude models and Claude Code and Claude Cowork and all their applications are now basically present and work on the AI GPUs, not just on NVIDIA-based clouds at these companies, but also Amazon Trainium and Google TPU architecture, etc., which means there's a very broad footprint relative to OpenAI, which for the most part to date has been running on Microsoft Azure and NVIDIA hardware. And they're also obviously very much diversifying their processes and so on. But Anthropic has made a lot of progress in a much shorter time on the infrastructure piece. They're also upping their AI data center infrastructure spend to build tens of gigawatts of data centers over the next 2 or 3 years. And because Anthropic does not have yet a direct consumer-facing model, where most people, consumers, mainstream people, would go to Claude.com. It's more the developers and advanced users, like many of the audience here, etc. Anthropic has a little bit of an advantage in terms of they have a higher margin path for in the short term because they don't have to spend as much time and effort and including resources partnering with consumer-facing companies, much like what Google did with Apple and so on. So Anthropic has an opportunity to potentially race ahead, potentially in the next year or two. And I just wanted to kind of highlight this picture. It's relatively unusual in early stages of big tech waves, the PC industry, the internet, mobile race, etc., where two neck and neck competitors, the one that has the first mover advantage and is not an incumbent against another also startup in that wave, to potentially be in a place where it's a much closer bout in the early years, and there is a non-trivial chance of the number two becoming the number one. So I wanted to highlight that. It's something to kind of just get one's mind around, and it's an important dynamic to keep in mind as we watch this, especially since both these companies, again, along with Elon's SpaceX, are likely to see IPOs later this year. And so we'll be reading and watching a lot more about this. Speaking of reading, I wanted to now just touch on my read of the week. And there's an article. OpenAI basically said that, hey, we are officially going to take off the market their GPT, which had a much more saucy, engaging personality that a lot of OpenAI ChatGPT users, and they have 900 million weekly users, but a lot of them were big fans of the strong, engaging personality of 4.0. And this is, part of the humanizing, anthropomorphizing of AIs that I've talked about at length in various posts. And OpenAI basically saying we're going to take this off the market is obviously causing some pushback by a lot of vocal users that, hey, we're going to miss this. We don't want our seductive chatbot to go away. It's again an important dimension to this tech wave versus other tech waves, where there are much closer, earlier emotional bonds and ties with AI tools. In previous cycles, the tools were just tools. Our PC was a PC, the internet was the internet, a smartphone was a smartphone. Here, there are emotional ties by the tens, if not hundreds of millions, which are important. And it's an important distinctive nature of this technology wave than anything we've seen in the past, and makes a bit of a management challenge and an investor issue that we should be mindful of. So I just wanted to highlight that as my read of the week. My obsession of the week is, as most of you know, I'm very much, along with everybody else, looking forward to AI smart glasses from Meta, Ray-Ban, and then Google this year, Apple maybe this year, OpenAI. They're all going to have some more smart glasses. One of the features that a lot of people like me have wanted, but these companies have not done for privacy and regulatory reasons, is the notion that with these glasses that we could easily identify on a ongoing basis the people around us. So you imagine going to a cocktail party and you're nervous, you don't know the names of half the people, but you should know them. They come up to you and say hi, and you don't know, hey Sam, hey Al, etc. And imagine if the glasses could just identify quickly and just tell you, hey, it's so and so, you met them 3 months ago at such and such. Well, this business, this feature has been relatively doable by any tech company, both startup and incumbent. The big news this week was that Meta is officially contemplating rolling this out cautiously as a feature called name tag in their Ray-Ban and other glasses, presumably. This is, and they're part of the thing that leaked out that they're doing it because of the current political debates that are going on, gives them a window of opportunity to potentially get this out there without too much pushback, which otherwise would be there. There are a lot of privacy issues, a lot of creepiness issues around this, and huge issues of how this would be implemented. This is, very much a case of, techies like me wishing for a feature, and then it's like, be careful what you wish for. And then you actually see the feature potentially upon you, and it has big societal implications, both positive and negative. People like me hoping that it's more positive than negative overall in terms of expanding our fabric of social interactions because we're better apprised on the spot of who we're interacting with, who we should be interacting with, how we should be interacting with them, etc. And these devices, whether they're glasses or other wearables, etc., could potentially help us in this path. And companies like Meta potentially rolling these things out is an important milestone, positive or negative. And because this has been an obsession of mine as a feature for a long time, I wanted to highlight it as my obsession of the week. And that basically concludes most of what I wanted to cover today in AI Ramblings number 42. As usual, want to thank you for joining us. Any comments, feedback, as usual, always appreciated, as are likes and subscribes for the algos. And very much wish you a great week and hope to see you in episode 43 next week. Stay tuned.